Only Yogesh has taken, I think so. Others? What about others? Type yes if you have taken central banking as elective. Are you working in RBI, Yogesh? Are you working in RBI? Hi everyone. Anyone? No, in SBI. Then why did you take central banking? How come? Generally, people don't elect for this central banking or risk management. These are tough electives, very tough ones. Very tough electives these are. Okay? Because these are not in your daily routine. That is the main problem. Okay? So generally students take, yeah. Acha. Many of your friends took it. Acha. So, see here. The best elective I will tell you is HR. Very easy to clear, and the notes of central banking. Those are enough for you. Enough. Okay, all the subjects, all the topics are covered. Those are enough for you to clear the paper. But my sincere advice will be, you should read the full question bank. Full. Kindly. But if you can't, at least go through the question bank. That question bank covers your entire paper. Entire. And some important notes I'll tell you. Those notes you have to follow. See, the toughest topics over here, which you will not understand that much, are last ones. I'll take those from tomorrow. Tomorrow, day after tomorrow, I'll take those. Okay? So, the question bank which I'm giving you and the notes which I'm giving you are enough for you. Enough to clear the paper. Enough. Well enough. Don't read anything else. Just go through that question bank. This question bank I have been giving since last 2023. This your new session started. So May 23, December 23, May 24, December 24, and this then. So 4 sessions I have tried this. And all your paper, here I won't say all, roughly 70-80% of your paper is from that question bank and the notes. That's it. Means question bank 80% and notes remaining something. Okay, so roughly 90% of your paper will be from the question bank and the notes. So you follow that only. Don't read anything else, but read this very sincerely. Very sincerely. Okay? Okay? Okay. So join this. I'll give you the Telegram link also. One sec. Join this Telegram link also, everyone. But don't miss this PDF which I'll be giving you. Okay, don't miss it at all. One sec. Let me share it. Now you have joined, all of you. All of you have joined. Those who have taken central banking. So I'll right now share it. Okay, hold on. Download it immediately. Okay. You wanted central banking now. One sec. Central banking revision. Yeah. Central banking PDF. Yeah. One sec. What you want, link for what? Link for what? Telegram? I'll give you. Hold on. So take this. First you take this question bank. Central bank 550 question bank. See this. Everyone getting this central bank 550 question bank. First one I have shared it. Everyone, have you got it? Central bank 550 question bank. Questions. Okay. Then next I'll share is paper, chapter and questions. That is done. This one. This definition part. One sec. Let me see if it is uploading. Sir, you have received in this comment section, kindly check this comment section. Everyone check your comment section. See, I'm able to see this. Sachin, are you able to see this? Two PDFs I have shared. Two. One is your 550 questions and second is definitions. No, it is there now. All others are able to see. PDFs are not visible. Kindly check everyone else. Kindly check everyone else. Are you able to see this? View the PDF. Okay, I'll pin this comment. Chalo, I'll pin it. Okay, Sachin, I'll pin this now. Hold on. One sec. Pin. See this. Now I've pinned it again. Now one more, I'll pin it. See these two. See this. Now you are able to see this. No. Now check this pin comment. Now check the pin comments. Everyone check the pin comments. Now check the pin comments. Everyone. Pin comments. See, in pin comments I have shared it. Ping it. WhatsApp link. Telegram link. I'll ping it. Hold on. Now download these PDFs. Okay, download these PDFs. Okay, got it now. In the pin comment, everyone check your pin comment. In the pin comment, download the PDFs given. Read these PDFs without fail. Read these PDFs without fail. Okay, again I am telling you. Okay, one second. Let me see. Anything else I can share, or this much is enough? Hold on. Huh? PDF definitions, full book notes. Just give me 1 minute. One sec. Yeah. Yeah, one more is there. See, this is the third one. So you can read first and the third one because second one is a repetition. Okay. Second one is a repetition. So you can read the first and the third one because they are, I think so, same. In third one, I have added few more points. Okay. So I'll remove this, unpin the second one. So now check this everyone. Now 1 and 2. 2 you are able to see this now. In the pin comments, 2 you might be able to see this. Okay, 2 of them. Kindly download these without fail and start reading from today only. Start reading from today only. Okay. So now, need for central bank. See, the preamble of RBI describes the basic functions of Reserve Bank as to regulate the issue of banknotes and keeping of the reserves with a view to securing monetary stability in India and generally to operate the currency and the credit system of the country to its advantage. Now look at this preamble. What is the role of central bank? Why should the central bank be there? Issue of banknotes, important points. Monetary stability, currency and credit system. Okay? Monetary stability means the rupee should be constant. Rupee should not fluctuate that much. Currency and credit system. To have a modern monetary policy framework means monetary policy framework. What do you mean by this? Policy framework. How should the monetary policy be decided? To meet the challenge of an increasingly complex economy, to maintain the price stability while keeping in mind the objective of growth. So price stability. Okay. So what are the important points? Issue of banknotes, monetary stability, currency and credit system, monetary policy framework, and price stability. Important points over here from RBI perspective. Okay. So RBI was formed, means is a central bank which began its operation in April 1935 under RBI Act. Okay, RBI Act was in 1934. RBI uses monetary policy to create financial stability, and it is charged with regulating countries' currency and credit system. Okay. Now these are the important points. See, elements of financial system. Which are the elements? Kindly note. See, these are the persons who require money, scarce, who require the money. Okay, and these are the persons who have money, surplus, extra money. Now both are same. Look at this: household sector, corporate sector, government, foreign. So kindly note the point over here is any sector over here will be having working as a scarcity also, will be working as a surplus also. Somebody might be having extra money at some time and other person might not be having the money at that time. Like some banks, we have this repo, right? How do you do the repo transactions? For doing the repo transactions, all the banks have their own this system, right? So you can maintain, many of the banks can maintain the repo transactions with other banks also. They have separate accounts. So or interbank borrowings. What is interbank borrowings? Various banks borrow from one another. So sometimes SBI will borrow from somebody, sometimes SBI will lend it to somebody. So it depends on the position at that time. So every company, even the government, will be having a scarcity sometime or will be having the surplus sometime. Okay. So what is our role? Our role is the intermediary. Say this. So what is the intermediary? Say this. There are central bank and banks, interbank debt, and QFIs, qualified financial institutions, DFIs, SPVs. Check this. See this. These are the intermediaries. Central bank, then bank-to-bank interbank loans, and QFIs. QFIs means it includes domestic financial institutions, SPV, special purpose vehicles, finance companies, investment companies. All these are the intermediaries. Okay. So these ones who are having scarce money will issue debt. Bonds will be issued. See, they will issue the bonds, and they will get the money. See, the one who issues the bond, so that person will give the bond and get the money. Okay. So the central bank and all these various things, what will they do? These bonds which are sold by these guys, these scarce persons, these bonds will be given to these surplus guys. Okay. So these persons will purchase the bonds and give the money. That money will be given to others. Okay. Yeah. No. I was doing some arrangement. Some technical arrangement was being done. That's why. Yeah, I muted the sound. So now remember, say this. The problem is these intermediaries, okay, investment vehicles, CIs, CISs, AIs. Now what is this? We are acting as the intermediaries over here. If you note this, mainly remember scarce and surplus. These are the two elements. And our job, even central bank's job, is to act as an intermediary. Okay? They act as only as an intermediary on this investment front. Okay? So important part which you'll have to remember is those elements which are scarce over here can be the same surplus over here later. So it depends on what is the position of yours right now. Now lenders means those who are having surplus and borrowers who are in deficit. So the non-financial intermediary economic units that undertake lending and borrowing. So non-financial intermediary economic units means what? They undertake lending and borrowing. So here we are intermediary economic units. They may also be called as ultimate lenders or borrowers to differentiate them from the financial. Now, what do you mean by this term? Firstly, understand this term, non-financial intermediary economic units means the role of the lender. Okay, lender means the one who is having the surplus money. So the one who is having the surplus money will definitely try to park it somewhere so that he or she gets a higher rate of interest. Lenders try and earn the maximum on their surplus money, and borrowers try and pay the minimum on the money borrowed, isn't it? That is the basic logic. Any bank will try to give lowest interest, right, on their deposits and get highest interest on the loans, right? So same logic is applied over here. Now intermediaries. Who are the intermediaries? Now intermediaries means which intermediate in the lending and borrowing process. Now intermediate means what? These are the middlemen. They interpose themselves between the ultimate lenders and borrowers and endeavor to maximize the profit from differential between they pay to the liabilities and earn the assets. Now this is basically your NII. What is an NII? NII means like the same job which we do in our bank. What is the job of what do we do in NII? We get the loans, we get the interest from the loans and give it on the deposits. So the difference is your spread or NII. In case of banks, this is called as bank margin or spread. Obviously, they endeavor to pay the least on the deposits and earn most on the loans. Okay, so this is common practice. Third is financial instruments. Now, what is the financial instruments? Here, if you have to do any financial business, then there should be a financial instrument. There cannot be a financial lending and borrowing without an instrument. Now, what is an instrument? Instrument will be the bonds. Mainly these are the bonds. See, there are two types of instruments. One is non-negotiable. This is bank business. In bank also we do the same thing, FD and loan. These are non-negotiable. And in money market, these are negotiable, treasury bills and bonds. But all of these are financial instruments. So which are created to satisfy the financial requirements of the various participants. These instruments can be marketable or non-marketable, right? Just now we saw this FD and loan, non-marketable, non-negotiable. And treasury bills and bonds, these are negotiable or marketable. Okay? Fourth, creation of money. Now, creation of money means what? This is the CRR system. The CRR which the bank owns is actually creation of money. How do you create the money? As you know, banks have the unique ability to create their own deposits because the public generally accept the deposits as a means of payment. So what do you mean by this? Banks can create their own money. How can banks create their own money? That is the system, material. I have shared this in Timothy. It's there in the pin comment. Timothy, All those who are watching on YouTube, kindly note, those who are in the paid class are getting the important PDF, 550 question bank PDF and the definitions PDF, means important definitions and various notes PDF. You go through only these and the classes and you will clear the paper. That's for sure. For sure. Okay. So those who are watching on YouTube, kindly join the class ASAP. Tomorrow also I'll be sharing. Timothy, are you able to get it? You are not able to download. Okay. What you guys do? Join the Telegram channel. Okay. Join the Telegram channel. Everyone join the Telegram channel. In Telegram channel, I'll upload it. Okay. In Telegram channel, I will upload it. Okay. If you are not able to download it from here, I will upload it in the Telegram channel. Kindly join. I've given the link. All of you are having the link of Telegram. All of you are having the link of Telegram. See this. Again, I have given it. Are you having the link of Telegram? Kindly join it right now. I'll just upload these documents over there. Hold on. So that you will be able to download it. Okay. Just give me 1 minute. Hold on. Telegram. Yeah. Kindly note, hold on. Just 1 second. This is 2FA password here. Hold on. Just give me 1 minute. One second. Where is it gone? I'll upload this, okay? Join now, I'll upload it. After the class, I'll upload this, okay? Right now, I am not able to join this Telegram web. Some password is it's asking. Telegram web, there's some password. Let me see. Okay, I'll upload it later, once I complete this class, okay? So, everyone join the Telegram channel. I'll share these 2 PDFs, okay? So now, creation of money. We are discussing this. Creation of money. How does the RBI create the money? See, creation of money is like this. Very simple process. Suppose if RBI gives 100 rupees, okay, prints the note of 100 rupees. So this 100 rupees will go to some bank. Okay. What will the bank do? Suppose if the CRR is 10%, imagine, I'm giving you a simple example. CRR is 10%, then what will happen? If the CRR is 10%, out of this 100, 10 rupees will be given to RBI by the bank, and 90 rupees will be given by the bank as a loan. Okay, so 90 rupees will be given as a loan. So this loan will go to whom? See, this is bank A. Bank A. This is bank A. So it will go to whom? It will go to bank B. Okay. Now for bank B, this is a deposit. So bank A to bank B. So bank B, this is a deposit, right? What will bank B do now? Again 10% CRR. So now it has gone to bank B. So what will bank B do now? Again 10%. So 9 rupees. 9 rupees to RBI under CRR, right? And remaining how much? Remaining will be 81 rupees. So this 81 rupees will go to bank C now. C. What will C do now? Again 10%. So 8.1 to RBI. Now what is this happening? Look at this. What is happening over here? RBI had created only rupees 100. Now how many rupees are created from this? 90 plus firstly 100. See, this 100 was the first creation. 100, then 90, then 81, then 72 point, then 64 point. Like this it will go on and on and on up to 0. So out of rupees 100, how many rupees have gone into the market or in circulation? Kindly note, how many rupees are there in circulation? So this amount goes to huge. It goes to around 1000 roughly, or roughly 700 or 800 with 10% CRR. Now if I reduce this CRR, to let's say 5%, then things will move on more fast, means more expandable way. How? What will happen? Out of this 100, 95 will go, then again 5 rupees to this, from 95 again 5%. So in this way, this will go up to 0. So the amount in circulation will be very huge. Just by rupees 100, creating one note of rupees 100, RBI is able to create with, let's say, for example, 10% CRR, RBI is able to create roughly around 800 rupees in the market through circulation. Okay, so this is the meaning of the word creation of money. Creation of money is in the hands of RBI always. Okay. Now financial markets. See, if you want to deal in any instruments, in any money, you need to have the markets. So what is the market? Financial market means institutional arrangements and conventions that exist for issue and trading of financial instruments. See this, issue and trading. Now issuance of instruments means what? Who can issue the instruments? See, many of the institutions can issue the instruments. Banks can issue the instruments. RBI can issue the instruments. Private companies can issue the instruments. Anyone can issue. And trading. Trading means secondary trading. Okay. What do you mean by trading? Trading is always done in the secondary market. Kindly note. Issuance is always done in the primary market. Trading is always done in the secondary market. Okay. Next. Price discovery. Now what is price discovery? Price discovery means it is basically dependent on demand and supply. The price of the shares, the price of the debt, and the price of the debt are discovered. What do you mean by discovered? Discovered means it is totally dependent on demand and supply. If the demand is huge, the price will go up. If the demand is less and supply is huge, the price will go down. Simple logic. So that's why it's called as discovery. Okay? Discovery always happens whenever you have this demand and supply without any interference. See, government interference is very less in our country. Government doesn't interfere in markets in our country. Okay? So the price discovery means the balance of demand and supply. Now, how is this interest rate decided? Now, this curve may be asked to you. This curve is called as ISLM curve. Earlier in your CAIIB syllabus, before May 2023, there was a ISLM curve for your studies in your ABM. Now this has been shifted into your ABFM to some extent, ABFM. Earlier it was there for ABM. Now what is this ISLM? Kindly note, ISLM means, see, the full form of this is investment savings, okay, and this is actually LPM. It's not LM, LPM, but we call it LM, okay, liquidity preference this management, okay. So what is this basically? See, there are two curves. One is IS and second is LM. IS means investment. IS means investment, okay. Now what do you mean by this investment savings? See, this curve will always be moving in the forward direction. And LM is basically liquidity. This curve will always be moving in the downward direction. And where these two meet, RBI will decide this should be the repo rate. Any repo rate is decided based on ISLM curve. Okay? Investment savings is for the common person like you and me. Kindly note, investment saving is for the common person like you and me. Okay? Means we do the investments. So we do the savings and investment, and LM curve is basically liquidity preference money supply. Okay, liquidity preference money supply. I'll write the full form. See, the full form of this is investment savings. IS means investment savings, and LM means liquidity preference money supply. So it should be actually LPM, but we call it LM. See, it is like this. Investment, savings, liquidity, preference, money supply. So such a big name is this, money supply. Okay, this is an important curve based on which RBI decides the repo rate. Okay, investment, see, there are two parts, IS and LM. IS is for you and me. As the interest rate goes up, our investment will go up, right? If the interest rate goes up in any country, we will try to invest more. Okay, but LM curve is for the business persons. So as the interest rate goes up, your LM curve will go down. Okay, got it? As the interest rate go up, your LM curve will go down, and as the interest rate goes up, your IS curve will go up. Where they balance each other or where they cut each other will be your repo rate. This rate is decided by RBI as a repo rate. Okay, so it all depends on what are people tending to invest and what are people tending to get the loans at what rate, business persons. Okay, got it? Monetary authority. Now, what is the role of RBI as a monetary authority? It formulates, implements, and monitors monetary policy. The objective is maintaining price stability. What is price stability? Price stability means inflation. Maintaining the price stability while keeping in mind the objective of growth. Okay, so price stability should also be there and growth should also be there. The main role of RBI is controlling the inflation. See, RBI has to look at both the things, inflation also and growth also. They have to balance it. Okay, but main target is inflation. Now, how does the RBI target the inflation? See, these are the factors. If your repo rate goes down, kindly note, everyone pay attention. If your repo rate goes down, then your inflation will go up, which is bad for the country. And your GDP will also grow up. So this is good for the country. So if repo rate is down, inflation will go up and GDP will go up. And what will go down? What will go up? One more. So price of the bond prices will go up. Okay. So bond prices up. Bond prices will also go up. Bond price. These will also go up. So three things will go up if repo goes down. So this is the basic job of RBI. It has to always focus on repo and CRR also in such a way that the inflation should not increase that much, your GDP should increase. Now in this time, you might be asked the question about the repo rate. Okay? What repo rate will they ask? You learn both of them. What was the repo rate increased in the earlier monetary policy? It was decreased by 0.25%. See, constantly RBI is decreasing it, right? 0.25 earlier, then 0.25 again, and this time 0.5. So you might be asked any of these questions. What was the RBI's stance or reduction in monetary policy in the repo rate in, let's say, May series or in March series? So they can ask you anything. Okay? So kindly note, in March also RBI had decreased the repo rate. In January also it had decreased the repo rate by 0.25. So 0.25, 0.25 and 0.5. And in this May series, they have decreased the CRR also by 1%. Now this, everyone might think this might lead to inflation. It might lead to inflation, but it may not. Why? Because RBI knows the things, where all we are going. Okay, right now the inflation rate is what? It is very less. Your CPI and WPI. WPI is almost nil, roughly nil, and CPI is around 3.5%. Okay, plus or minus something, but it is very less. So RBI is least concerned about inflation right now. So what is RBI trying to do? Trying to increase the GDP. Okay, because it knows inflation won't increase that much. Got it? Money will be absorbed in the market. Kindly note this. Money will be absorbed in the market. So what is the role of RBI now? See this, Monetary Policy Committee, MPC. You will have to study about MPC, latest MPC also. What was the decision of latest MPC? Kindly go through this. Monetary Policy Framework, MPF. Monetary Policy Process, MPP. Monetary Policy Instrument, MPI. And Flexible Inflation Targeting Framework, FITF. You will have to definitely study MPC because MPC questions will be there. And the PDF which I have given, I have already included the MPC details in this. Okay? What next you have to study? The 15th Finance Commission and 16th Finance Commission. I have included that in the PDF also. 15th Finance Commission and 16th Finance Commission. Both you have to read this, okay? Because 16th Finance Commission has also been formulated and it is giving the results by October 31. What is the role of Finance Commission? That is also asked. Finance Commissions, what do they do? I have included everything in the PDF, question bank PDF, okay? So what does the Finance Commission do? It does the role of managing between the center and the state. Center and the state, distribution of income between the center and the state. And it does so for next roughly 10 years. Because 15th Finance Commission was in 2015-16. And new Finance Commission has been just now formulated and it has given the results. Okay, it is going to give the results. It is yet not submitted this report as yet. So kindly note, you will have to read about 15th Finance Commission and 16th. 15th, this chairman was N. 16th is Pangaria. Kindly note this. You will get the question on either of these two. 15th Finance Commission and 16th Finance Commission. I have included both of them in the PDF. Okay, that notes PDF. So you will have to go through it. Okay. Next, regulator and supervisor of financial system. So RBI also acts as the regulator and supervisor of financial system. Means it has to supervise all the banks. It has to regulate all the banks. Now, not only banks, kindly note, RBI is not the regulator of banks anymore. Not only banks. It is the regulator of NBFCs also. It is the regulator of your this online payments also. Okay, phone pay, all these things. So prescribes broad parameters of banking operations within which the country's banking and financial system functions. Broad parameters. Okay. Objective: maintain public confidence in the system. Means people should trust the bank. If people stop trusting the banking system won't exist at all, isn't it? Protect depositors' interest, provide cost-effective banking services to the public, right? So these are the jobs of the bank as a regulator and supervisor. Manager of foreign exchange. So it has this FEMA in its hand. FEMA, the owner of FEMA is actually RBI. Okay, FEMA was formed in 1999. Objective: to facilitate external trade and payment and promote orderly development and maintenance of foreign exchange market in India. So this was a job of FEMA. Why was FEMA formed? To facilitate external trade and payment and promote orderly development. Okay. So kindly note this role of FEMA. What is the authority of RBI in foreign exchange? So what is the authority of RBI in foreign exchange? See, RBI controls the FEMA basically. Okay, RBI controls the FEMA. Controls the FEMA means RBI will anything which goes beyond FEMA, anyone who goes beyond FEMA, that person will have to face the raid from ED. Okay, ED is the main part, right? ED works if there is any violation of FEMA. ED only focuses on FEMA. Okay. So what is the authority of RBI? Controlling domestic money supply to influence foreign exchange market. Domestic money supply. So how does it control the domestic money supply? CRR, SLR and repo. These three. Okay. To actively intervene in forex market as a requirement of managed float. So intervene in forex markets. Okay. So how does it intervene in forex market? Through FDI, FPI. Means as the money comes in, RBI has to focus on the controlling this money. Okay. To review and review main policy relating to management of reserves. Reserves. Now kindly note, reserves means forex reserves. In our country, presently the reserves are more than 750 billion. In our country, the reserves are more than 750 billion. Kindly note. So we are in a much stable position now. To compile and make half-yearly reports on management of foreign exchange. So it has to make the reports also. See here, nobody in our financial markets is indispensable. Indispensable means nobody is above the control of anyone. Everyone is controlled. Okay? Issuer of currency. See, RBI is also the issuer of currency. Issues, exchanges, destroys currency notes as well as puts into circulation coins minted by the government of India. Okay, coins are minted by government. Coins are not minted by RBI. Kindly note. Even 1 rupee note is given by government. See this. To give the public adequate quantity of supplies of currency notes and coins and in good quality. Okay. Now you will be asked the question on CBDT also. CBDT I have given separately in the PDF, and we will be taking the same on CBDT in the next 1 or 2 classes. Okay. Who issues currency notes and coins in India? So look at this. Issued by Government of India is what? Coins and rupee 1 note. And issued by RBI is all other notes. Okay. All other notes are issued by RBI, whereas government issues only coins and 1 rupee note. Okay. Developmental role. So RBI has to play a developmental role, performs a wide range of promotional functions to support national objective. Regulator of the and supervisor of payment and settlement systems means what? See, promotional function to support national objective. What are the national objectives? It is basically your budget. RBI has to see to it that it is supportive to the budget. Okay? So that is the national objective. Regulator and supervisor of payment and settlement system. RBI has to see to it that the payment and settlement means your NEFT, RTGS are working in line. Introduces and upgrades safe and efficient modes of payment system. Right? New payment systems are formed. That's why NPCI is there. Right? NPCI's role is the same, isn't it? Related functions, banker to government. So RBI acts as a banker to government. Means what? When your government wants money, it will raise the money through RBI, performs merchant banking function for central and state governments, and also acts as their banker. So it will act as a banker. Means what? What is the banker? Government is having its own account in RBI. Like we have now, same government will have the account in RBI. Okay? So banker to government. The Reserve Bank manages a public debt and issues new loans on behalf of central and state government. Right? So Reserve Bank manages the public debt and issues new loans on behalf of central and state government. The admin of public debt also devolves on RBI. This may involve an issue and retirement of loans, payment of interest, and all matters pertaining to debt certificate and registration of debt holding. Means what? See, basically it means it will issue manages the public debt and issues new loans on behalf of government. Okay, so new loans means what? Government wants the money. So how will it get the money? Through bonds. So this is the second part, public debt. Okay, so government will issue the bonds through RBI and people will purchase those bonds. Okay, so this is banker to government. Banker to banks. Maintaining the banking accounts of all the scheduled banks. So all the scheduled banks are maintaining banks with account with RBI. The central bank acts as a banker's bank in different capacities. Custodian of CRR, cash reserve, lender, and bank of central clearance, settlement and transfer. So ultimately, if any payment system fails, ultimately who is responsible? Ultimately it will be RBI. So that's why Bank of Central Clearance, Settlement and Transfer. Okay. So that was it for today. Tomorrow we'll be doing the new topics. So I'll be sharing the same PDFs. Many of you might have got it by now from this comment section, or I'll be sharing it in the Telegram section. Okay. Chalo. Bye everyone.